All right, so that was our little fast track process looking at time frames. Now, what I want to look at now is a concept called support and resistance. Now, you may have heard of this before. You may have heard it banded around, but you're maybe not sure exactly what it's all about. Let me talk about what support and resistance is. Support and resistance are exactly the same thing, but support is something that occurs underneath the market. So you can imagine a floor. In other words, a floor supports you and you're standing on it. And resistance is something above the market that stops you going any higher. Imagine if you were in a hot air balloon and then you hit. Obviously, you wouldn't be in a hot air balloon inside a big warehouse, but let's say you did have something that was lifting you up, then the resistance would be what's above you, stopping you from going any higher. So support is underneath the market, resistance is above the market. Now, what does it actually mean? Now, basically, support and resistance are areas, and this is very subjective, guys. This is the kind of thing that you can argue about with somebody all day long. Someone's got different support levels, someone's got different resistance levels. Some are pretty obvious and they're pretty no one can really argue about them, but then others, as you get onto shorter time frames, become a little bit less obvious. But let's look at this one here as we've got this right in front of us. So if we look at this chart here, I've got on a 15-minute chart, each candle representing 15 minutes of trade, and this is again is the FTSE. I can see now that we have a position or a scenario is the word I'm looking for, where we have several times the market has tagged a kind of level and not gone much lower. You can see these are 15-minute charts. Now, they're not precisely, we're not talking about an exact level that is just touched. We're talking about a reasonably key but obvious area where the market has moved. Now, that would be classed as a support level on this chart. So what you would kind of do is you would get a drawing pen or you get a line and you would put a line there. And that would indicate to you that the market has support there. So what you're basically saying to yourself is, listen, during this day, many times the market came from underneath this support level, came back, touched it, and it cemented itself as an intraday support. So in other words, this was quite a key level on that day. Was it a level from far back? We're looking back, we're saying no, it's not. It's literally just a level from that day. So that would be a support level. Now, similarly, we'd also say, okay, we got up here and we saw that the market couldn't go much higher around this level. Now, we've only got a few ticks range there, so we can say, you know what, that's a resistance level. We got here several times and we didn't go any higher. It's above the market, so it would be labelled as resistance. Now, let's go back and look at maybe a daily chart and we can put it on a bigger perspective. Let's scroll back and see. So, you start to get better at this as you become more seasoned at trading, and you've been doing this a long time. But initially, the first thing I can see here is there's a huge support at around this 6,600 level. You can see how many times that we've tagged it, and it's literally this is the process, guys. It's an eyeballing process. There's no formula to it. There's no specific right or wrong way of doing it. It's an eyeball process and saying, you know what, we tagged it here, we tagged it here, we tagged it here, here and here, give or take. So I can quite comfortably say on my daily chart I've got support around this 6,600. Now, the mistake that people make is that they think that it's a very, very finite level. It's 6,600, it's all or nothing. The markets do not work like that. Sometimes you will get them where they touch a price point exactly to the tick, but other times you're going to get situations where it's broad. It may be 10 ticks short. It may go through by 10 ticks. So you can't really say that it has to be an exact price point. You kind of say this is a broad area. I've got some support here. It kind of runs between sort of 6,620. That's my middle point of it, and that's my support zone. So I always like to think of support and resistance of a fuzzy zone. Now, the higher the time frame you're going on, the more the zone comes into play. The shorter time frame, you kind of get, it's more finite, because obviously as the zone gets bigger, it becomes a breakout as opposed to support and resistance. So I'm looking at the chart and I'm eyeballing, I'm saying, okay, support and resistance. I can also see some here during this spell of time. You can probably start to see it now. Some good support around this level here as the market tagged it several times. I can see some resistance in this, May to April area, sorry, March to April area. Lots of resistance there, and eventually we popped through it and broke out. So this is kind of how we draw these things on our chart. We're looking for levels where the market has been unable to go higher or been unable to go lower. And if we're going on a low time frame, we can see pretty much straight away, obviously it's very, very quiet today, but we can see we've got some support down here at the 7226 level, and we've got some resistance up here. Now that's a broad way of looking at it, and often we look at it and say, okay, it's how many times a market has tagged that level. But we can also say that it's a high swing point. So for example, this might be classed as a resistance level because it proved itself as a level where supply demand turned over and sellers got back in control of this and pushed it down. So we would perhaps mark that on, and that's not the straightest line in the world, but you use a better drawing tool than that. You mark it on and you'd say, okay, that's my now resistance level, and actually it does tie up reasonably well with this kind of thing here.